Shares of Yahoo fell the most in nearly a year on concerns over Yahoo's investment in Alibaba. Alibaba's payments business, Alipay, was restructured and is now controlled by a separate company. Yahoo owns a 40% stake in Alibaba and is using its position as an entry into China's internet market. Let's see how this is playing out with investors. Larry Haverty is a portfolio manager at Gamco. His firm has nearly 3 million shares of Yahoo, and he owns the stock personally. Larry comes to us now from Tampa, Florida. Larry, welcome back to Bloomberg West. So first of all, how concerned are you about this, and how much does this diminish Yahoo's holdings of Alibaba?
Well, I think I'm very concerned, and I think it probably diminishes the value of the holdings by less than the stock went down today. So let's take a look at both of those points, Emily. The first one, why I'm concerned. I'm concerned because of the method of communication here. This was snuck into the 10Q that was released on a day where Disney was releasing its earnings and Tencent, that big Asian internet company, was releasing its earnings. This should have been released in an 8K, a press release, and there should have been a conference call with management. This was a very, very material fact, this change in the relationship. Investors have been focusing on the value of Alibaba. I can't understand where the lawyers in the company were, where the board of directors was, or where the management was in terms of the way they disclosed this to investors. For a public company, this is plain vanilla unacceptable. Second, why do I think it's probably worth less than the stock went down? The stock went down, I guess, in the neighborhood of $1.50. That's a pretty significant decline. Our view is that Alipay was probably worth in the neighborhood of $2 to $3 a share. The real problem on Alipay was that if monetization improved on it, it's growing so fast that it could have been worth triple that a couple years down the road. So a very valuable call option was at least preliminarily taken away. Now, we don't know what the compensation will be for the shareholders, but it won't be nothing.
Larry, let me ask you. I mean, Larry, do you think these guys are going to get sued over this? Did they do something illegal here?
Well, I don't know. I am familiar with the rule in China that the company has to be 51% owned by Chinese investors. That is actually one of the positive things here, because that didn't change. And people like me, we made a mistake, and we didn't add in the Japanese ownership of this thing, and it wasn't owned 51%. And the locals in China, I think we're following their rules, and we have to live with those rules if we invest in China. And we know what they are, and when we buy the stock, we accept those rules. Now, that said, I think there should be compensation, and how that goes about, I don't know. But Jack Ma is becoming a very, very big figure worldwide, and he can't basically disenfranchise the owners of 43% of his company. If he does, he's never going to get any public equity ever again, and he's about to go to the market, I think, in bringing Taobao public. So we think we're going to get fair compensation for this.
Larry, David Einhorn's Greenlight Capital has said that Yahoo's holdings of Alibaba were the primary reason they recently made a big investment. How valuable is Yahoo without Alibaba?
Well, the principal value of Alibaba is Taobao, and that's not on the table yet for the restructuring. So we believe that Alibaba was worth about $9 billion or $5 a share to Yahoo. I think there's probably $1 diminution in value here. So there's probably $4 left. Remember, we have about $9 in value in public companies. We have $3 or so of cash, and then we have cash flow that even with this is valued at somewhere between 4 and 5 times. So to use the Graham and Dodd margin of safety term, there's plenty of margin of safety in owning Yahoo right now.
But would you invest in Yahoo, Larry? But would you invest in Yahoo without Alibaba if it didn't have those holdings?
That's going to. I don't think that's going to be the case. I think Jack Ma is probably smart enough to figure out that he has to pay nice people like me what this thing is worth. And I think right now we'll get, one way or another, probably $4 a share for this. The thing that bothers me is that 2-3 years from now, Emily, that could have been $12 a share. A tremendous amount of upside has been taken away from the shareholders, and I think they have to be compensated for that.
Larry, when you look at the management team of this company, do you think, I don't know if you loved him before today, but you got to love him less today after they pull this and don't tell you what's going on. Do you think there needs to be a change? Does Carol Bartz need to be out at Yahoo?
I think the directors ought to be asking very serious questions of the management in a number of areas. Clearly, the Microsoft search venture, which was the latest cure for the ill, is not working. That's got massive problems. You have this communication failure. I just don't know where the directors are, but they have a job to do, and I think it's about time that they did it.
All right, thanks so much, Larry Haverty. Always great to have your insights on Yahoo.